Well, we've gotten early access to some draft forms that the IRS is putting out that we'll be using for reporting your taxes in 2026. Here, I want to talk about Form 8949. This is the form where we report all the crypto transactions that you did. So typically, it looks like a spreadsheet, if you will. And the IRS requires us to separate that reporting into short-term and long-term gains. And on the Form 8949, and the IRS has a box that you check. And typically, it's been A, B, and C if it was short-term gains, D, E, and F if it was long-term gains. You also have to separate these forms as to whether or not the cost basis was reported previously to the IRS or not. A, B, C, and D, E, F were all related to pretty much stocks, and we had to pretty much alter it to do crypto. Now they've got new designations, GHI and JKL, for reporting digital assets. Now they're isolating it and separating it so they can distinguish between the two on the Form 8949. Up until now, other capital gains on stocks were blended in with your crypto, so the IRS really couldn't distinguish the two. This step is very significant. If we're doing your tax returns to be done right, this is going to be very critical to making sure you're not flagged for an audit. And we have here, you can see the letters ABC, in this case GHI, this is a short-term one. But you see underneath it is the spreadsheet. Column A, we describe what you're selling. B is the acquisition date. C is the date it's sold. Column D is the proceeds, where it says the sale price. This is the key column that the IRS is zooming in on. The other columns have to do with what was the cost, are there adjustments, and then what's the net gain. Now, the proceeds column is a number that will be reported on your 1099 DA. The 1099 DA that's going to come, say, from Coinbase, is going to list not the bottom line total, but rather every single transaction that you had that was a sale or exchange or a transfer in or out. These are all going to be listed, each one separately in there. What the IRS is going to do is they're going to take from this Form 8949 the total from the proceeds column and see if it matches the total that they're expecting to see from the 1099 DAs that they're going to receive. The key here is they want to see at least as much as is reported on the 1099 DAs. And that's our strategy when we do your return at CryptoTaxAudit. We want to make sure that we completely and accurately account for all that. And we generally structure it in such a way that we account for more just because of the mechanical way in which the IRS looks at it. Another thing to be aware of is that the 1099 DAs themselves must be reported on here, even though the cost basis is inaccurately reported. So each accountant might take a different swing at doing that. We'll certainly describe it further when we see what the 1099 DAs look like coming from the big exchanges. This is a very interesting form. It's starting to show that the IRS is getting really serious and getting granular about the information on digital assets that they're getting. It's also becoming more and more difficult to really call cryptocurrencies anymore because there's very little that's hidden about them other than the keys on the blockchain. They're becoming quite visible, and with the new CARF crypto asset regulatory framework reporting coming out in 2027, countries are going to start to see all your trades all over the world. So very interesting. Thank you for watching the Clinton Donnelly Show. Every week, we bring you the insight you need to stay ahead of the IRS, understand your crypto taxes, and protect what you've built. This is information you simply won't hear anywhere else. Not from influencers, not from exchanges, and not from the IRS itself. My goal is simple: to give you the clarity and the confidence to trade, invest, and sleep well at night. That's what drives me, and it's why CryptoTaxAudit exists, to defend crypto traders and keep our clients safe before anything becomes a problem.